everybody. Thanks for tuning back into Crypto Mainly. Wow, I took a couple of days off. I went for a break on my motorcycle and was touring for a few days with very little contact, very little access to my laptop or to my phone. So I'm sorry I've been missing a couple of days, guys. Turns out that actually, um, came back and very surprised to see what's happened in the market. So let's just jump straight into the content today. So this is a trade that we were looking for in my group, in my trading group. So you can see we took a nice short from this region at the top here, and that trade was successful. Unfortunately, um, as I say in the group, sometimes I say to the guys to move your stop to break even is one of the methods that we use. So hopefully some of the guys moved their stop to break even and had a good result out of this catastrophic dump down that we've seen in Bitcoin. So, I mean, the question everybody's asking themselves now is, where's the bottom? How far is it going to keep falling? And all those things. So I'm going to look to try and, shed some light on that for you today. So just going to have a look at this chart. This is one that we've been following for a while now. And as you can see, guys, I did say that I thought we would get inside the red triangle there and hopefully see some kind of bear trap scenario. It's very much less likely that that's going to happen now. What with the price actually breaking down from this long standing wedge. I mean, there is still a chance that if price were to sort of bounce back up in the next few days before the weekly close and we close back above 25,000, then we would close back inside this pattern. But I think looking at the way things are, guys, in the markets, traditional markets as well as crypto, it's looking more likely that we're going to see some further downside in actual fact. So we'll come to the reasons why in just a moment. But yeah, unfortunately, guys, this looks very bad, and it looks like we're going to get some continuation further to the downside, which as I say, I'm surprised with. But then what with firstly Luna, that Luna happened, initially. I believe it was around about the sort of this point here, around about sort of the 8th or 9th of May that we got this lunar situation, and now we've got Celsius, which have been which is a borrowing and lending platform, which is potentially having problems. It's sort of halted withdrawals, transfers, and things, which suggests that that they've got liquidity problems, which again has caused another sell off and broken through support and things here, which is a real shame. I thought that we were getting some really nice market structure here to take us into the summer. As I say, guys, we'll see where the weekly closes. It's on the extremes of hopium that happens. But if we do get a close back above 25,000 on this weekly close, then perhaps we can keep some bulls' dreams alive. So this is a logarithmic scale of the Bitcoin chart. And as you can see, guys, we did get the yellow line on here is the 200 simple moving average, which lots of people are talking about at the moment. And as you can see, we did get a wick below, and we do seem at this stage to be finding support there. The only thing I'd say with that, guys, is everybody seems to be all talking about the 200 SMA and saying that the only time it's gone below is the was the March 2020 COVID crash, but in actual fact, if you look back through time, it's not the first time that we've had wicks below the 200. Even if you look very carefully, you can see actually that the candle bodies were closing below the 200 in this instance, which is back in sort of August 2015. I mean, it doesn't look horrendous on here, guys, but bear in mind that this is a log scale. Okay, so if you take a measure of how far that went below the moving average, that's 30% on that occasion. And a shallower move on this one, but nonetheless, 14% there, and and the COVID situation, if we take a measure from that one, that took us, again 30% below. So please don't think that it's impossible that we won't go any lower than that. If we do, if we took a 30% measure of where we are from now. That would take us down to around about the sort of 15,500 mark, which incidentally on this chart you can see the 1.618 is at 14.5. But I don't actually think that we're going to see that. We've had such such downside since November. Considerable downside. Even on a weekly time frame, you can see the number of red candles that we've had in a row. I mean, that's never happened in the history of Bitcoin before. Although we have had the lunar situation and we have now got Celsius, and obviously BNB, they halted withdrawals, but I think that was only because of a stuck transaction on the Bitcoin network, or allegedly that's what they were saying it was. And that's sort of Binance is trading normally now, although the SEC is investigating Binance for its the way that they launched the BNB token. But I do seem to remember back in, I think that Binance have been under investigation from the SEC a number of times over the years, and in fact, about their token and the way that they launched it before previously, and they've always come up squeaky clean. So I think that's just a bit of FUD being added to the the already extremes which are in the market. So I think worst case scenario, guys, if you see on this here, this is a fib extension. So you can see I took a measure from the top there to the bottom and the retracement. And as you can see, this is on a log scale, guys. So as you can see on a log scale, the one spot 272. If this was an AB equals CD correction, you can see that that we've actually already completed that AB equals CD move, because of the sort of velocity of what's happening. I wouldn't be surprised if we come down to sort of even test that 18,000 mark. And the reason for that, guys, if we look at the S&P, in a trading group, we were watching this. These red arrows, incidentally, there was a very clear sign on a monthly time frame. If I just show you that, you got this inverse hammer, sorry, a hammer candle, at after a sort of a parabolic run, if you like. The last time that happened, January 2020, we saw the sell-off, which arguably was because of COVID. But nonetheless, I did raise the alarm bells in the trading group, just to warn people that 35% correction was what happened the last time, and we've got we had the similar sort of candlestick pattern happening again. If we take the 35% measured move from the top, let's just take a look at that, see where that leads us. So a 35% measured move would take us down to, in actual fact, down to sort of 3,100. That's a little too deep, I think, for where we are already in the way that things are. So what I'm going to do, incidentally, guys, this box here, which we just get this organised for you. So this is what we were looking at in the trading group. So we were watching, we were getting a bounce from the support, and we were watching to see whether the bounce held. But as we can see now, actually, it didn't hold. So I'm just gonna get rid of this chart and this box and things, so it's sort of no longer valid. And you'll notice, guys, if we go to a weekly time frame here, you'll notice that the 200 week moving average suggests that we've still got a way to go here. And what I would also say, which is a little concerning, is we've got this topping pattern here. But more concerning than that is that this is actually starting to look like a 5-wave move, which would be the first of a 5-wave impulse wave to the downside. So that is very concerning. That would suggest that there's a macro change in the market structure. If you look at the the previous corrections that we've had, they've been 3-wave, which would be normal on a corrective move. Anyone that's familiar with Elliott wave will know that it's 5 waves on an impulse move, 5 waves to the upside, and 3 waves to the downside. And you can see clearly on the downside moves that you've got like AB equals CD corrections on the way down here. And worryingly, this is actually starting to look like a 5-wave move, which. So what I'm looking at is you've got one, you've got two, 3, 4, and then this is the fifth wave. So incidentally, what does that mean? Where would the fifth wave end? Well, let's just have a quick look. We'll draw some fibs again. So we'll do so the fifth wave would be, according to Elliott wave, if this is a 5 wave count, it would be the measure from the waves 1 to 3 and the retracement. So you've got 1, 2, 3, and then the retracement. So the measure from the high to wave 3, and then the retracement. And usually you would get somewhere between the 61.8 and the 78.6 is where this fifth wave measure would be. So it's interesting that you can see already, some of you with your eagle eyes will see that actually it's the 61.8 is lining up nicely with the top area of this support here. And you'll also see that the 200-week moving average is in the same region. So interestingly, if we draw that little box there, you can see that we've got some confluence of different things here. So, the 61.8 measure is at the top, and we've got the 200 weekly moving average coming in just below it. So it looks as though we've got some more, more room to go for the downside in traditional markets. So that's, even if we go down to the sort of the 200 moving average, you're looking at probably, between 6 and 7% further to fall on traditional markets, so on the S&P 500. So that again would translate to further downside in Bitcoin territory, and hence the reason that I'm thinking that we'll probably end up somewhere down the sort of, I think the 18,000 mark will be where we end up. So if I just draw this on here so we can refer back to this in the future, you've got the previous highs here. So it says 19,128. That is slightly variable, depending on which exchange you're looking at. I am looking at the Bitcoin index on this occasion, so it's a cumulative measure of the different exchanges, so as a sort of an average. So 19,128. That's obviously not the high, as we know that was just under 20,000. But you'll notice it is actually the candle body closes, which is what I've gone by here. So let me just, as I say, let me just draw the that area of interest there. So if we do break down below the the previous all-time high, that will also be another first for Bitcoin. But as I've said many times in my videos, guys, anything can happen. So just do bear that in mind. Literally anything can happen. The cryptocurrency market is very small in comparison to traditional markets. So if the biggest players in that market decide that they want to move our market in any direction that they choose, then unfortunately we have to just sit back, watch, observe, and see what the market makers are planning. Try and get some new price structure to give us an indication of where we'll be next. But I mean, if we look at, for example, the realized price on Bitcoin, you can see on this chart that we're actually sat on the realized price. You can see in bear markets in the past, we have gone, we've gone below the realized price. So it wouldn't be completely unheard of that we if we went below that, it would certainly be quite normal in actual fact in bear markets for us to go below the realized price. But you'll also notice that in terms of, are we in a buy or sell zone? If we look at so if we look at the logarithmic curves, you'll notice that we are below the lowest band, and that's only happened once. The way that this particular logarithmic curve has been calculated, it's only happened once, which was March 2020, which is the COVID crash. And you'll notice that we are below the lower logarithmic band. What's created that? Possibly Luna, and now obviously Celsius created a lot of fear in the market, and so we are getting you know firsts in the cycle again, in this market cycle. So it's interesting to see. But in terms of, we are in the depths of buy zone here. This isn't the time to be thinking about selling and exiting your positions and things. If anything, we are probably likely to go sideways for a long period of time. Once things settle down. And I'm not saying that there's no further downside, but you can see just how far and how deep we are below the lower logarithmic band there. So we are in, we're very close to the 200 simple moving average. There are lots of indicators that are basically saying, is now's the time to start maybe DCA and maybe start to think about, braving out another sort of bear market, and looking forward to the next cycle, which obviously I think the end of this cycle will come sort of towards the end of this year, between sort of November and February, I think, and then we'll see, the start and the run up to the next halving, which is in May 2024. So there is lots to look forward to, guys. I know that it's very difficult to think about the bigger picture when you're seeing such collapses in price. But when just to leave you on a positive note, cryptocurrency and Bitcoin is being adopted at twice the speed that the internet was at this time in a similar part of its cycle. So just to put that into perspective, guys, we're talking about 4 to 5 billion users, by 2030. So it's an incredible rate of growth. It's a lots to look forward to. We are still early. Please keep your chins up, and try and look to the future, look to the longer term, and bear in mind that that Bitcoin is the best asset class, the best ever, the best asset class of all time is what I'm trying to say. And just bear that in mind, guys. Hold on tight to it. I do think the dominance is creeping up. The dominance is going to continue to creep up by the looks of it. So we will get some altcoins which perform well in their USD pairing, but they won't do very well in their Bitcoin pairing. So I do think we are going to probably get a Bitcoin season where the price, when it does bounce, is fueled by the altcoin liquidity being put into from the altcoins into Bitcoin, which will mean obviously the dominance is going to go up, the altcoins will be coming down, and Bitcoin price will be fueled. The pump will be fueled by money being moved from the altcoins into Bitcoin. So yeah, sad times, guys, but please take care of yourselves. Most importantly, is look after yourself and your health. And also remember, guys, take profits and buy something real. And I look forward to speaking to you again tomorrow. Take care, guys. Thanks for listening.